Section 1. Setting the stage. The crucial role of financial regulation. The financial services industry in South Africa operates within a framework of rules and regulations. These regulations are the foundation of trust, stability, and fairness. For financial planners, understanding these regulations is fundamental to their practice and ethical obligations. This chapter serves as a guide through the regulations governing financial planning in South Africa. We will explore key legislation, the rationale behind these regulations, and their implications for financial planners and their clients. Section 2, Navigating the Landscape, an overview of South Africa's financial sector. South Africa boasts a sophisticated financial sector, crucial for economic growth. The stability of this sector is paramount to the health of the economy. A well-functioning financial sector facilitates capital allocation and provides access to credit. The South African government has implemented a regulatory framework to ensure stability and fairness. Financial institutions must comply with prudential requirements and risk management frameworks to ensure their soundness. Section 3, the pursuit of stability and fairness. Objectives of financial regulation. The objectives of financial regulation in South Africa are to maintain financial stability and ensure fairness and transparency. Financial stability is pursued through prudential regulation and systemic risk management. Fairness and transparency are promoted through market conduct regulations. These regulations ensure consumers are treated fairly and provided with clear information. By fostering fairness and transparency, regulators aim to build trust and confidence in the financial sector. Section 1. The genesis of regulation, early frameworks, and the need for oversight. Financial regulation in South Africa dates back to the early 20th century. The discovery of gold and diamonds led to the establishment of banks and stock exchanges. Early regulatory frameworks focused on ensuring the solvency of financial institutions. The Banks Act of 1921 introduced regulations for banks and established the Office of the Registrar of Banks. The Companies Act of 1926 included provisions for the regulation of stock exchanges and securities. Section 2. Responding to crisis, reforms, and the shaping of modern regulation. The post-World War II era saw significant changes in the global financial landscape. The 1970s and 1980s were marked by financial crises, highlighting the need for robust regulation. The collapse of the Bank of Credit and Commerce International in 1991 underscored the need for enhanced oversight. The Financial Services Board Act of 1990 established the Financial Services Board as the primary regulator. The Financial Institutions Protection of Funds Act of 2001 established a deposit insurance scheme to protect depositors. Section 3. Towards a risk-based approach, the shift from reactive to proactive measures. The global financial crisis of 2008 exposed weaknesses in regulatory frameworks. There was a global consensus on the need for a more proactive and risk-based approach to regulation. South Africa embraced this shift, incorporating these principles into its regulatory framework. The establishment of the Prudential Authority and the Financial Sector Conduct Authority under the Twin Peaks model in 2018 marked a significant step. The Twin Peaks model aims to enhance financial stability and promote market conduct and consumer protection. Section 1. The Twin Peaks Paradigm. A new era in financial regulation. The global financial crisis of 2008 led to a reassessment of regulatory frameworks. The Twin Peaks model of regulation gained traction internationally. South Africa embraced the Twin Peaks model enshrined in the Financial Sector Regulation Act of 2017. The model divides regulatory authority between two entities, each with a distinct focus. This separation enhances regulatory effectiveness and accountability. Section 2. The Prudential Authority Safeguarding Financial Soundness. The Prudential Authority within the South African Reserve Bank focuses on prudential regulation. Its mandate extends across banks, insurers, retirement funds, and other financial institutions. The authority ensures these institutions operate on a sound financial basis with adequate capital buffers. It employs supervisory tools, including inspections, surveillance, and stress tests. The Prudential Authority plays a crucial role in crisis resolution, maintaining a stable financial sector. Section 3. The Financial Sector Conduct Authority, championing consumer protection. The Financial Sector Conduct Authority, FSCA, focuses on protecting financial customers. The FSCA regulates market conduct across the financial services sector. Its primary objective is to ensure fair treatment of customers and transparency. The FSCA sets and enforces conduct standards and promotes financial literacy. By championing consumer protection, the FSCA fosters trust and confidence in the financial services industry. Section 1. The Financial Sector Regulation Act, a cornerstone of reform. The Financial Sector Regulation Act of 2017 is the bedrock of the Twin Peaks model. The Act consolidates and streamlines financial sector legislation. It establishes the Prudential Authority and the Financial Sector Conduct Authority. The Act introduces innovative regulatory tools for proactive oversight. It also establishes a framework for the regulation of financial market infrastructures. Section 2. Treating customers fairly, embedding principles of fairness and transparency. The Treating Customers Fairly (TCF) initiative embeds principles of fairness and transparency. TCF is a philosophy that places the customer at the heart of every decision. The initiative is based on 6 core outcomes to ensure fair treatment of customers. Financial institutions must demonstrate their commitment to TCF through their practices. The FSCA monitors compliance with TCF principles, promoting a customer-centric financial services industry. Section 3. The Retail Distribution Review, reshaping the landscape of financial advice. The South African regulatory authorities embarked on a comprehensive review of the financial advice industry, culminating in the Retail Distribution Review, or RDR. Launched in 2014, RDR aims to enhance transparency, professionalism, and consumer protection. RDR addresses conflicts of interest by promoting fee-based models of remuneration. It also introduces stricter competency and qualification requirements for advisors. Advisors must provide clear documentation on advice and costs, fostering trust and transparency. Section 4. Navigating the Labyrinth, the interplay of key regulations. The Financial Sector Regulation Act, the Treating Customers Fairly initiative, and the Retail Distribution Review represent key pillars of South Africa's reformed financial regulatory framework. However, these regulations do not operate in isolation. They are interwoven, forming a complex and interconnected web of rules and principles governing the financial services industry. Financial planners operating at the forefront of this regulated landscape must possess a thorough understanding of not only the individual regulations but also their interplay and how they collectively shape their professional obligations and ethical responsibilities. They must navigate this complex regulatory labyrinth with diligence and integrity, ensuring that their practices align with both the letter and the spirit of the law. This requires not only a deep understanding of the technical aspects of these regulations, but also a commitment to upholding the principles of fairness, transparency, and customer centricity that underpin them. Financial planners must prioritize the best interests of their clients, providing them with sound, objective advice that is tailored to their individual needs and circumstances. By embracing a culture of compliance and ethical conduct, financial planners can contribute to the stability, integrity, and fairness of the South African financial services industry, fostering trust and confidence among consumers and promoting financial inclusion for all. In doing so, they play a vital role in supporting economic growth, social well-being, and the long-term prosperity of South Africa. The digital age data protection in the financial sector. The financial services industry has undergone a profound digital transformation, revolutionizing the way services are delivered and accessed. This digital revolution has introduced new challenges, particularly in data protection. Financial institutions collect, store, and process vast amounts of personal information. This information is essential, but also a valuable target for cybercriminals. Protecting this sensitive information is paramount to maintain client trust and safeguard the financial system. South Africa has strengthened its legal framework with the Protection of Personal Information Act. Enacted in 2013 and fully effective in 2021, it aligns with international best practices. Financial planners play a crucial role in upholding data protection principles. They must implement measures to protect personal information and foster a culture of data privacy. Embracing data protection as an ethical imperative builds a trustworthy and secure digital financial ecosystem. The Protection of Personal Information Act, safeguarding privacy in the information age. POPIA is South Africa's cornerstone for privacy in the information age. Modeled after the EU's GDPR, it governs personal information processing. Personal information includes any data related to an identifiable person. POPIA's 8 principles guide lawful, fair, and transparent data processing. It grants rights like access, rectification, and erasure. The information regulator ensures compliance and promotes data protection awareness. Non-compliance can lead to fines, reputational damage, and criminal prosecution. Navigating data protection. Practical implications for financial planners. Financial planners must embed data protection principles into their practices. Assess current data processing activities and develop a comprehensive data protection policy. Train staff regularly on data protection responsibilities. Establish secure systems for storing and transmitting personal information. Provide clients with clear information about data handling processes. Demonstrate commitment to client privacy and trust. The global reach of finance international regulations and their impact. Financial activities transcend national borders with remarkable ease. Capital flows freely, investors seek distant opportunities, and institutions operate globally. This interconnectedness fosters growth but presents regulatory challenges. The 2008 crisis highlighted the need for international regulatory cooperation. International bodies develop global standards to safeguard financial stability. Standards cover capital adequacy, risk management, and anti-money laundering. South Africa is deeply integrated into the international financial system. Compliance with international standards is crucial for access to global markets. South African regulators actively participate in international forums. International cooperation ensures stability and a level playing field. The Foreign Account Tax Compliance Act, navigating international tax transparency. FATCA combats tax evasion by requiring foreign financial institutions to report U.S. taxpayer accounts. Enacted in 2010, FATCA has global implications, including in South Africa. Non-compliance results in significant penalties like a 30% withholding tax. South Africa and the US signed an IGA in 2014 to facilitate compliance. The Consumer Protection Act. Empowering consumers in the marketplace. Financial planners in South Africa navigate a comprehensive regulatory landscape to protect consumers. The Consumer Protection Act of 2008 strengthens consumer rights. It applies to all transactions, including financial services. The Act introduces a range of consumer rights. It has significant implications for financial planners. They must provide clear information about services and fees. The Act prohibits unfair marketing practices. Consumers have enhanced avenues for redress. They can lodge complaints with the National Consumer Commission. The CPA empowers consumers and holds businesses accountable. In an increasingly complex financial landscape, financial planners play a pivotal role in guiding individuals and families towards financial well-being. They serve as trusted advisors, helping clients navigate financial products, investment strategies, and more. Their role extends beyond advice. They act as educators, empowering clients to make informed decisions. The traditional image of financial planners is fading, replaced by professionals prioritizing clients' best interests. This shift is driven by evolving regulations and a focus on fee-based models. Today's financial planners must understand financial markets, tax laws, and estate planning principles. They must stay updated on regulations and market conditions to provide timely advice. Strong interpersonal skills are essential for building trusting relationships and communicating complex concepts. As the industry evolves, financial planners will continue to adapt, but their core function remains empowering clients to achieve financial goals. Trust forms the bedrock of the financial planning relationship. Clients entrust financial planners with their hard-earned savings and dreams for the future. This responsibility demands the highest levels of ethical conduct and professionalism. Ethical conduct reflects one's character, values, and commitment to integrity. Financial planners are bound by a strict code of ethics. Adhering to these principles is essential for the profession's sustainability. Ethical breaches erode trust and cast a shadow over the industry. Commitment to ethics enhances the profession's reputation and fosters integrity. The Justices of the Peace and Commissioner of Oaths Act upholding integrity in legal processes. Financial planners navigate legal frameworks, upholding the integrity of legal documents. The Act outlines roles and ethical obligations of Commissioners of Oaths. They verify identities and witness signatures, ensuring proper execution. Impartiality and objectivity are crucial to avoid conflicts of interest. Diligence and integrity uphold the public trust in the legal system. Safeguarding trust and integrity. Financial planners in South Africa navigate complex regulations like the Financial Sector Regulation Act and treating customers fairly. Compliance is the foundation of trust, integrity, and professionalism. It's an ongoing journey, not a destination. Embracing compliance enhances practices and strengthens client relationships. This fosters a trustworthy financial services sector, benefiting all. Compliance reflects the values guiding the financial planning profession. Navigating change and embracing best practices. The financial services industry is in constant flux, shaped by technology and evolving consumer expectations. Regulations adapt to emerging challenges and lessons from past crises. Continuous learning and adaptation are essential for financial planners. Staying informed and engaging in professional development is crucial. Seek resources from professional bodies like the FPI. Embracing technology enhances compliance efforts. Technology automates tasks and provides real-time insights. Leverage technology to focus on client relationships and advice. Strive for ethical conduct and transparency in the industry. Embrace change, best practices and technology to drive positive change. Section 3. Towards a more inclusive and trustworthy future, the shared responsibility. The journey towards a more inclusive and trustworthy financial services sector is a shared responsibility. It requires collaboration among regulators, industry bodies, financial institutions, and consumers. Regulators must balance innovation, competition, and consumer protection. They must identify risks, close gaps, and enforce laws. Industry bodies promote ethical conduct and professional standards. They provide education, resources, and collaboration platforms. Financial institutions must create a culture of compliance. They should prioritize consumer protection and transparency. Consumers must demand transparency and hold providers accountable. By becoming informed and reporting unethical behavior, consumers contribute to a better financial landscape. Together, we can build a trustworthy financial sector for all South Africans.